All right. So first things first, when drawing the long and short golden fib, personally, I like to do it on a larger time frame. Okay, larger time frames, there's less noise. And when using the long and short golden pocket and when drawing fib retracements, what that is doing is you're basically drawing levels in a trending market. Okay, so you want there to be a trend in the market with if you're going to draw fib levels. If you're trading a sideways market and you're looking for the high to low, the fibs will not be as accurate. Okay. On the flip side, if you're in a trending market, the fibs will more than likely be most accurate or will be more accurate, excuse me. Okay. Now, here's a really good rule of thumb to use when you're drawing or when you're looking for trends and you're going to draw your long and short golden pockets. Okay. A good rule of thumb is you should be able to identify the trend of that stock or market within 1 to 3 seconds. Okay, that's a really good rule of thumb. Now I know it may sound fast or it sounds like too little of time. It comes with experience. Okay, so like everything else in the market, the longer you do something and the longer you use it and you use it day in and day out and you're constantly back testing on the weekends and at night and stuff like that, it will become more and more obvious to you and you'll be able to pick up on things a lot quicker. Okay, so you should be able to identify the trend within 1 to 3 seconds. Now, what I mean by the trend, well, are you looking to the downside or are you looking to the upside? Okay. And that is basically when, or excuse me, how you figure that out is, well, what's the market environment like that you're trading? Okay. So recently, we've been in a lot of volatile markets. Volatility has been our friend for the past few months, honestly, the entire year. And we've mostly been in a downtrending market, except for the last 2 to 3 weeks. Okay. So if we're using the general rule of thumb, we want to identify the trend in 1 to 3 seconds. If you struggle beyond that, the fibs won't most likely work. And that probably is a good thing. Okay. Don't force draw yourself or don't force drawing fibs and don't force it upon yourself and upon your chart. If the trend isn't there and if it's not obvious enough to you, then it probably isn't there and you move on. The fibs wouldn't work anyways. Okay. Remember, these are Fibonacci retracements, long and short golden pocket. They're like anything else in the market. Okay. They're like any other indicator. Okay. I'm not going to be a firm believer in them, but I do really like trading with them so far. And I've been using them for what, maybe a month or so, every single day, day in and day out. So I enjoy them. I've definitely added them to my toolbox, but they are not the end all be all for my trading. Okay. They don't dictate what I solely trade. Now, there are some people out there. Okay. There's a lot of people that trade with Fibonacci's, and that's the only thing that they trade. And that's fine. If that's the kind of trader that you turn into, more the merrier. Okay. That's your edge. That's your style. Trade to your strengths. Okay. Forget your weaknesses. All right. So I want to show you guys Apple here. Okay. Now, when we're looking at a downtrend, okay, let's go back in time here a little bit. All right. So let's see Apple's all-time high right here. Okay. We're looking at short levels. Okay. We want to draw the short golden pocket. Here's Apple's all-time high right here. Okay. Here is the bottom that the market temporarily, or excuse me, not the market, that Apple temporarily found on April 24th. Okay. So here's our swing high to swing low. When drawing the short golden pocket, you want to do it from the swing high to the swing low. Okay. In this case, it's going to be Apple's all-time high down to the bottom that it found on January 24th. Okay. So we'll go ahead and draw it. Again, I'm going to do it the best that I can. So I might not get it right to the exact cent. All right. So there's the all-time high and there's the swing low. Okay. Now the golden pocket, this is where it gets a little bit subjective. Okay. And this really depends on what kind of trader that you are. Okay. Some traders out there, when they use the golden pocket, they only use the 61.8% fit. Okay. And I know my chart is a little messy. Let me go ahead and delete that real quick, or my other batch of Apple fibs. And there we go. And that'll clean it up a little bit. Okay. There are some traders out there that only use the 61.8% fit as the golden pocket. Okay. I'm not like that. Other people will say that the 78.6% fib doesn't count as the golden fib, or as the golden pocket either. Okay. I'm not like that either. Some people don't even have a 0.707 fib. I have it added. And then there's another fib that some traders will use. And I think it's like it's 0.65 and then another number. I don't remember what the third number is, but they also incorporate it's 0.65 and another number, and they include that into their golden pocket as well. Okay, so this is all subjective. You play around with it. Google and YouTube, some common fib ratios that people use in the golden pocket and see which one works best for you. Okay, but the golden pocket is these three fibs combined. Okay, that's what creates essentially the golden pocket. Some people call this the golden fib or the golden ratio. I don't stick to that. I include these two, but again, it's all up to personal opinion and what you prefer. Okay, so now these are fib short levels. Okay, so we use these levels to when we want to short Apple and when we're looking for short price targets to the downside. Okay, you can also use them as upside targets. Okay, you don't have to use them as downside targets. Once Apple reclaims a specific level, you can then anticipate it to test the next fib level to the upside. Okay, and that can act as resistance. Okay, well, here we have Apple's golden pocket. Notice when Apple finds its bottom. Okay, we find the bottom of the trend on January 24th. Notice it makes a pretty strong recovery. Okay, it took about 2 weeks, I'd say, a little bit more most likely, to reach this bottom. And then in about 5 to 6 trading days, it rallies back up into here before it starts stalling out. Well, look where Apple started stalling out. And we see our first bit of selling pressure right here, coincidentally, right smack dab in the middle of the short golden pocket. Okay, we noticed we made a small double top here. We rallied into this fib level on January 31st. And then look at this, we actually gapped down and we moved lower, but buyers step back in. So we know there's some selling pressure right here, but it's not strong enough yet, right? Based on price action, is there any conviction to short Apple right here? And the answer would be no. There's no sign that Apple or that Apple sellers and Apple bears are in full control right now. Okay, there's really no strong indication that we should be shorting Apple. But we can start to see for the first time since really a bottom was found, except for these 2 days, that there was some selling pressure. Okay, so this is now when we start to pay attention. We take it day by day. Okay, now notice the entire time that Apple starts trading inside this golden pocket, it loses its upside momentum. Now, there's 4 phases that the market goes through. This is one of them. This is the distribution phase. Okay, here was the accumulation phase before buyers took price back into the short golden pocket. Once Apple was up here, notice how price starts trading sideways. Well, this is a distribution phase before Apple takes its next leg down, and that's eventually what led down to the February 24th level. Okay, was this distribution phase. Notice a distribution phase that occurs right here in the short golden pocket. Okay, this is something that you can really keep an eye on, and it's a strong indication that bears are in control. Now, notice what starts to happen. The volume starts dying down on these green candles in this distribution phase in the short golden pocket. Okay, it's a strong indication, again, with volume dying down on the green days and then volume coming in on the red days, specifically these 2 candles right here, bears are in control and they're getting ready to make a move. Now, look what happens. Eventually, bears take price down a leg and they rally price back up. They push price back into the golden pocket again. Look at the low volume. Okay, on these 2 green candles right here, February 15th and February 16th. Look at the low volume pushing into the short golden pocket. Extremely low volume. That's not a high probability to see further upside. And if you wanted to take a risky short entry, that would be it. A low volume push, and actually on February 16th, a double top into the short golden pocket. The low volume being the biggest confirmation of it all. And then if you look at that, look what happens on February 17th and 18th. Apple takes a bigger leg down before finally bottoming on the 24th. Okay, so this is how you draw your short golden pocket. You look for your swing high down to your swing low. Now, keep in mind, it's going to take time for these levels to hit. Okay, you can identify this on January 24th. You would wait to short Apple if you didn't feel comfortable going long until Apple got up here. So this is about patience too. Okay, we don't have a long golden pocket yet. Okay, we don't have a new swing low to swing high to look for. Okay, if anything, we would do it from January 24th to February 9th. But what's the trend? in the market. The market is in a downtrend. Okay. So once we get confirmation that the bears are in control, the distribution phase is playing out, we have our short golden pocket drawn here for Apple, we would then look and use every single fib level to the downside as a price target. And eventually, Apple would make a full retracement down to the downside. Okay. We could draw this. Don't know why that popped up. We could draw this from January 24th. We wait a couple weeks. We see the distribution phase underway, and we could have nailed, I mean, in theory, we could have nailed a downside move from Apple starting at 174, 175, because this is where we begin to see sellers coming in and utilizing the short golden pocket all the way down to one. I don't even know what fib level that is, 155. Okay, because that would be a full retracement pretty much back down to the downside. We would have gotten our move actually and then some. Okay, and every single fib level was eventually hit to the downside as well. Okay, so when you're drawing the short golden pocket, you look for the swing high to swing low. And that is currently what we're seeing play out with SPY right now. Now, my SPY chart is going to look a little bit different because I got zones drawn all over it as well. Okay, now SPY's swing low or swing high to swing low, excuse me, for the short golden pocket, we're using all-time high for SPY, just like we used for Apple. But this time for SPY, we're using the February 24th lows. And that was the lowest we got in SPY. Okay, that was the lowest we got in SPY was 410 on February 24th. Yes, we eventually saw lower, or not a lower low, but we did see lows again around 415 to 420 before Powell catapulted us to 460. Okay, we're using all-time high down to January or down to February 24th. Excuse me. This golden pocket is still in the works. Now, here's the exciting part. How big of a retracement down did we get for SPY? Okay, that is the question. All right, right now we're about to trigger the 61.8 golden fib. Okay, I mean, that price target has been met twice now. Another thing to look at, notice the resistance that comes into play at the short golden fib level of 707. Okay, price could not hold above it. Okay, we saw a close above it on March 29th, and it actually came with volume. But that's an overextended daily candlestick coming at the top of a trend and in the short golden pocket. Okay, I honestly don't blame traders if they went long based on the volume and the daily candle. But this is why drawing fibs can be important and it can help save you from these trades. Had I drawn, or if I was going long on SPY, I was looking to go long here, but I saw that this daily candle formed right in the middle of the short golden pocket, I would not have entered that trade. That's a high risk potential. I would say, like, I don't even know if that's high reward. I would say it's a low reward because you're still inside the golden pocket. So it's just a high risk trade all around. Okay. And we're still seeing SPY break down to the downside. Now we've got one close below 61.8 fib, and then price found a bottom last Friday in demand, popped back up. We're at risk of losing this golden fib again. If SPY gets a close below this golden fib again, I would be very cautious going bullish because the golden fib, we're watching a distribution phase play out yet again in SPY. Okay. Now, following fibs alone, using the short golden pocket and using fib rules alone, next price target, once we get a close below 453.47, it's all the way down at 445.30. Okay. That is we're looking at a $8 to $7 drop in SPY. Okay, once we get that close, we have to get that close though. Okay, now I said in the beginning of this video, and I know a couple of you joined in after the video or after the meeting got started. Okay, I'm going to say something new that I haven't said yet. To make Fibonacci to make Fibonacci retracements all the more powerful, you combine them with other indicators, or you combine them with other parts of your system. Okay, something that I've incorporated this year into my trading is zones. Okay, now let's combine supply zones with the short golden pocket. All of a sudden, we know, or at least we've known, we've been watching this supply zone, excuse me, for a long time now. This supply zone has been intact for SPY for months now. Okay, I mean, this was confirmed back in beginning of February, okay, was this daily supply zone right here at 458 to 460 when we saw its double top, okay? Now combine the short golden pocket here. Now we have a bearish confluence between the short golden pocket and the daily supply zone. Now all of a sudden, our edge just got a whole lot bigger because we're combining the fib retracements into something or with something else, okay? Now, in the beginning of this video, I said Fibonacci retracements are not the end all be all, okay? They're like any other indicator in the market. And this is what happens, or this was confirmed last week, okay? So SPY daily candle closes below 453.47. You got the close below that you needed. So in theory, your price target following fib rules becomes 445.30. Okay, well, this is why we incorporate other things into our trading, because it's not one thing rules all. Okay, nothing is perfect. Nothing has a bigger, better edge over anything else in the market than another indicator, I would say. Look where SPY bounced, right at a demand zone. Okay, so if you bag held puts potentially between after this close and you ignored this demand zone, you would have lost money, because if you were just following fib rules, you eventually would have lost money and you would have been stopped out on this candle. So if you're going to use fibs, which I think are a great tool, and we're seeing them play out and their effectiveness play out before our eyes right now with SPY, I would say incorporate other things into your trading. I've incorporated them with zones already, and that's another reason why I'm incorporating the RSI. I have not traded with RSI in probably almost 4 years, but I'm bringing in the RSI because I want to bring on a momentum indicator, and I'm also starting to use EMAs again because I'm really trying to refine and drill down on my setup or on my system, okay? And I'm also going to keep zones as well. All right, so combine Fibonacci retracements with other parts of your system, and it will make them that much more powerful. Okay, now another thing, and side note here, real quick, something that I noticed in SPY before I started this meeting, we've got a bearish confluence with SPY on the daily between price action and the RSI. RSI is a momentum indicator, measures momentum. The RSI is making a lower low on the daily after today, depending on how this daily candle closes, okay? I have it drawn right here. Look what price action is doing. SPY is looking to make a lower low on the daily time frame today. That's a bearish confluence matching with the RSI. Now combine that bearish confluence with the short golden pocket and rejection today. And SPY did reject to the T at this daily supply zone. I mean, they timed this so perfectly with this pump into this supply. And then the Fed member who was speaking this morning, I might butcher this name, Brannard, started speaking, and they pummeled the market right then and there. And SPY just wicked into the supply zone and then cratered again. Okay, we're seeing a lot. I mean, the stars are kind of aligning here for bears. Bearish confluence between price action and the RSI, the short golden pocket, and daily supply. 448 is the big level that bears must break, and then all hell breaks loose. 445.30 will print. Watch for 444 to print. Below 444, we come into 440, and then we're going to come into this potential demand zone right here, previous supply. Watch for it to be a new demand zone, or at least an area of value, and then we come into 437.12. And honestly, we can start staircasing, or we can start staircasing down as far as these fib levels go. And SPY could easily make a full retracement to the downside before it's all said and done. Okay, so does anybody have any questions for me about using the short golden pocket? I'm going to move into the long golden pocket next. I use bigger time frames. So the bigger time frame, the more dominant it is. I use the daily. Honestly, so this SPY short golden pocket, you could have drawn it from the daily, or you could have drawn it from the weekly. Okay, I mean, you would just draw it from all-time high down to the recent trend low, which was 410. So you can find it on the weekly, maybe even the monthly. I'm sure the monthly would show it, but it just might not look that clean on the monthly. But bigger the time frame, the better. Now, the one thing I will say is over the weekend, Sunday night watch list, or Sunday afternoon watch list, I should say, I posted Apple short levels, and I used the hourly time frame. And they almost triggered yesterday, but Apple blew right through it. Okay, so I actually drew hourly or a short golden pocket for Apple using the hourly time frame. Okay, now what I will say is, excuse me, Spot or Apple failed to hold above this long golden pocket. This was a risky short entry, and I'm criticizing like my own trading here because technically this short golden pocket was broken yesterday at close. This hourly candle closed above the long or the short golden pocket with volume. Technically, this is a busted short golden pocket, but Apple failed to hold above it into the opening bell and in pre-market, and then we can see the fade back down. So I kept it on there, and this is just like anything else in trading. There will be fake outs and there will be fake moves to the downside and to the upside. This looks to be one of those fake breakouts above the short golden pocket. Okay. You can still use the short golden pocket if you're still in Apple puts. I collected profit, a solid 20% before I started this Zoom meeting, but this setup is still working itself. Okay. This short golden pocket is still in play and it's playing out to the T. You use every single fib level to the downside as a price target, and that's where you can collect profit. Okay, I entered weekly 175 puts. Well, look at the 38.2% fib or short fib. Okay, that's 174.88. That's when those puts go in the money. Okay, they'll actually be a little bit more than in the money. Look where Apple stalled out yesterday after having a strong opening drive. It stalled out at the top of the golden pocket. We did see some selling pressure before the strong close. But of course, that was not the real move. This was the real move today. So the golden pocket, if you think the golden pocket didn't work and it failed, I'm with you. If you think it was just a fake close and this was the real move today and this was just a fake breakout, I agree with you too. Okay, so this is one of those iffy instances where just like anything else in the market, golden pocket worked or it didn't. Okay, I kept it on there just to see, and lo and behold, this is what we get. Okay, so as of right now, if you're still in Apple, until an hourly candle closes green above 175.78, 174.88 is your price target. Okay, so now I want to flip to oil because this is where I'm going to demonstrate the long golden pocket. The long golden pocket has been hard to come by recently. I'm not going to sugarcoat it because of the conditions that we've been in. Okay, all right, so drawing the long golden pocket, you're going to do it the exact opposite of the short golden pocket. So one more time, the short golden pocket, you use swing high to swing low, and that gives you the short golden pocket. When you're looking for the long golden pocket, you're using the swing low to the swing high. Okay, and that is exactly what I did for oil right here, /CL, sweet crude light or sweet light crude oil futures. Okay, the swing low that I used was on March 15th. Okay, if you notice, that was the bottom of this sharp downtrend after oil found an all-time high, or not an all-time high, but a high of 130 a barrel or something similar to that. Okay, this was the low of the trend before the trend started to reverse. Okay, now this was the low that I needed, but I waited and I waited until a confirmed reversal. You could have drawn it here, but the next daily candle would have made that invalid. Okay, we pushed higher, so that was not the high. That was not the swing high. Instead, it came on March 24th because this is when price reversed back to the downside and started making lower lows and lower highs. Okay, so this is our swing low and this is our swing high. Once we get this daily candle as confirmation, then we can draw our swing low to swing high and we get our long golden pocket. Okay, now we wait for this to play out because in theory we could have drawn it right here, and actually the golden pocket was hit on that day. Now, something I want to show you, I'm going to switch to the 4-hour time frame. Fibonacci levels, if traders are actively using these fibs and if you drew them accurately, they can act, Fibonacci levels can act as support levels. Okay, it's not going to happen every single time, but they can sometimes act as support levels. Notice where /CL bottomed every single time. It bottomed right at the last leg of the golden or the long golden pocket. Okay, 78.6% fib. Some people include this in the long golden pocket. Some people don't. I do, and I also throw in the 0.707 fib. And thus, these three fibs create the long golden pocket for me. Now, coincidentally, combine the fibs, or combine Fibonacci retracements with other indicators, price levels, demand zones, whatever, to make them more powerful. So you have a higher conviction using them. This 78.6% fib level, 98.5 or $98.53. Okay. The bottom that oil found, $98. Okay. A psych level. Every $2, it seems like, is a key level for oil to the upside. Okay. A 4-hour candle never closed below this golden fib. They did close it right there sometimes. It came very close to breaking, but the long golden pocket was never broken, and neither was $98 support. Okay, buyers held both levels. Now, combine the long golden pocket with the channel that /CL had been trading in. Okay, this is the breakout that we traded this morning. We traded the breakout of this daily channel and the long golden pocket, and that's why we were able to capitalize and catch such a nice move in XLE this morning. Okay, so you can draw golden pockets on anything, any commodity, any ticker out there, any market. You can draw a golden pocket on Bitcoin. And if you see a valid golden pocket on Bitcoin, you can trade Mara or any other miner stock off of that golden pocket, I would say, because we just did the same exact thing with oil. We indirectly traded oil by trading XLE. We traded oil's breakout of the channel and the bounce, and this is the bounce right here, out of the long golden pocket. Okay, the same thing can be said for Bitcoin, and then trading in a sympathy move, Mara, Riot, HUT, MSTR is a bigger ticker for Bitcoin related stocks as well. Okay, here is a really interesting retest that we got a confirmation of, or that we're going to get confirmation of, in about an hour and a half. I already posted this chart, but I'm going to say this now, and I should have said it in my original post in the server. Confirmation of this retest comes when this 4-hour candle closes. So we've still got an hour and 41 minutes until we get confirmation, but it looks like on a retest, old resistance of this downward channel and the long golden pocket is going to be confirmed as new support. I am watching oil stocks to swing yet again if oil looks to confirm old support or old resistance is now new support. Okay, and here's the long golden pocket in the works. This is probably my best example that I have right now, just because of the volatility that we've been in basically the entire year. So long golden pocket, it's been hard to come by. I'm not going to lie. So in all seriousness, for the market conditions that we are trading in right now, use this to your advantage. Okay, we're in a downtrending market. We're in sell the rips yet again. Okay, we've been in a downtrending market the entire year. Go on bigger time frames, such as the weekly and the daily, and look for those swing highs to swing lows and draw your short golden pockets. Get your short fib levels drawn and see if price action is reacting to them well. Okay, use that 1 to 3 second rule. Okay, I'm going to go over that real quick again, just for anyone who didn't miss it. Okay, you're identifying trends when you're drawing fib retracements. Okay, if you should be able to find a trend within 1 to 3 seconds. If you can't find a trend within 1 to 3 seconds, don't force draw your fibs, because they probably won't work. Okay, if Fibonacci retracements only work in a trending market, whether it's up or down. Okay, that's why you can draw the short or long golden pocket depending on the trend. Okay, if you're in a non-trending market, Fibonacci retracements will not work. All right. Maybe I missed it at the beginning, but where does the 7? Oh, all right. So I will happily go over this as well. I did go over this in the beginning, but I will say it again right now. this is to each to their own. Okay. A lot of people and a lot of traders use fib retracements, but this is a special cult in the stock market and in the trading community. There are some people that only use the 61.8% fib, and they call it the golden fib, the golden ratio, and that is they don't even have a golden pocket. That's called the golden ratio, the golden fib. That's what they look for. Okay. There are other people that will combine 61.8% fib and the 78.6% fib, and then that forms their golden pocket. So they combine these two fibs to make the golden pocket. Other traders use the 0.707 fib, and they make that their golden pocket. Or excuse me, they incorporate that into their golden pocket, and then they combine all three, and then that makes the golden pocket. Okay, there's another fib that I've seen traders use, and I'm going to be honest, I didn't say this in the beginning. The only traders that I've seen use this fib are the ones who actively trade Bitcoin and crypto with leverage. But it starts with, its numbers are 0.65, and I don't know the third digit. So there's 3 digits for every fib, but the first two are 0.65, and I forget the third one. Okay, but they use that fib or that fib level a part of their golden pocket, and so they combine 618, 0.65x, because I don't remember the third, and 786, and that's their golden pocket. So it's all to each to their own, Thomas. Whatever you feel best using, experiment with it, back test with it, and see which one works best for you. Personally, I like having a balanced, I like having a balanced spacing in between the golden pocket. Okay, if you notice, for the most part, each of these 3 fibs are fairly spaced out. Well, if you use the 0.65x one, it's going to be very, very close to 618. Okay, I like to have a nice bounce or a nice balance of in between, and that gets me a nice golden pocket. Now, these will all be relative as well. Okay, price might bounce above it, or it might bounce to the T. Okay, it always remains to be seen. But each to their own, experiment with it, I would say, and see which system works best for you. I will say a lot of the old school traders on FinTwit, like, I'm not going to sound too harsh, but a lot of people who joined Twitter when Twitter first came out, like the 2010, 2009, 2008, a lot of those FinTwit traders only use 618. They only use that. They don't even consider 78.6 a part of the golden pocket. Okay, it's a lot of the younger, newer traders that start incorporating the golden pocket into this. Okay, so to each their own. Whatever works best for you is how you should trade, and constantly refine your edge in your system. Okay, but that is the long golden pocket in the works for oil. And now I want to show you XLE before I go ahead and wrap up our meeting. Okay, so here is XLE's golden pocket, and I don't think we'll be swinging calls, judging by that nasty price action. I hope everyone exited green and sold into strength, because what a brutal fake out this was. Okay, swing high, or excuse me, swing low to swing high. Okay, that draws, or that gives me my long golden pocket. Okay, now I'm going to be honest, this probably isn't the best long golden pocket, but this is what I drew for XLE. Notice it only tested the golden pocket one time. Okay, for XLE. Instead, it flirted with the 50% fib a whole lot, and it kept getting rejected at the 23.6% fib a whole lot before finally had a strong breakout this morning before the market reversed. Okay, so the golden pocket, each fib level can act as a support and it can act as a resistance. It might only test the golden pocket one time, and then it starts making higher lows. Each fib level is still valid as far as support or resistance goes. It's just that the golden pocket is considered a deeper retracement, and that's going to lead me into my last note for this workshop meeting. Okay, so in an uptrending market, you have the 0% fib is going to come at the top, and then the 100% fib is going to come at the bottom. Okay, in an uptrending market, if price does a shallow retracement, and a shallow retracement, I'm actually going to switch my examples. I'll go back to oil for this example. Okay, so what oil ended up doing was it made a very deep retracement. Okay, Oil made a deep retracement all the way down to the golden pocket. If a stock hits or moves into the golden pocket itself, that is considered a deep retracement. Okay. The deep retracement fib levels are the golden pocket fibs. Okay. So if you ever hear anybody say ticker XYZ is doing a deep retracement or I'm watching for a deep retracement, that means they're anticipating the stock to move into the golden pocket. Okay. That's a deep retracement. It's still in an uptrend, but it made a deep retracement down into the golden pocket. If the golden pocket breaks, the trend is considered busted and actually did a full retracement back down to the downside. The long setup is busted. If you ever hear anybody say a shallow retracement, that's when price bounces at any of these other fib levels. Okay, so 23.6, 38.2, and 50% fib levels. They can be considered the shallow retracement fibs. Price can bounce at any of them during an uptrending market. Okay, so don't always draw the long golden pocket and say, I'm not going to trade until ticker XYZ falls into the golden pocket, because you might miss the move. Okay, price could retrace into the 38.2% fib that you drew 100% accurately, and it bounces and it reverses to the upside. That is a 100% valid move using fib retracements. All that happened, it was just a shallow retracement. That's all. Okay, that doesn't mean it's an unhealthy move or there's more downside to be seen. Okay, it's just when people draw the golden pocket, that's when you can start anticipating a bigger move to the upside for a full retracement back to the upside up here. Okay, and that's what I'm anticipating, to be quite honest, with oil. Now that oil held the long golden pocket, we have a confirmed breakout of this downward channel. I'm looking for oil to eventually hit 116, 117. And that's where I'm going to flip from bullish to neutral on oil yet again. Okay, so don't rule out price bouncing at any of these fib levels if it doesn't get to the golden pocket during, and that same thing can be said when you're using the short golden pocket as well. Okay, so let's see SPY here real quick. Okay, so let's say during an uptrending market or during a downtrending market and during a volatility spike. Let's say SPY, we draw our short golden pocket right here. Okay, we find our bottom right here. Let's say SPY struggles at 445, 445. SPY is struggling at. Okay, that's the 50% fib retracement to the upside, and that's for our short golden pocket. If we get a fat bearish engulfing daily candle here at 445 for SPY, don't not take that trade because it hasn't hit the golden pocket yet. Okay, that's still a 100% valid rejection and a bearish or strong bearish indication at a key short fib level. Okay, there was no telling that SPY would make a retrace all the way into the golden pocket, and that's what it ended up doing, and that's what we're seeing play out right now. Okay, instead, SPY maybe stops at the 50% fib and then reverses and retraces all the way back down to the downside. Okay, don't ever rule that stuff out because it's always going to be a potential possibility. Okay, so don't draw the golden pocket and just wait until price gets there, because price might not get there. It might bounce at another fib or it might reject at another fib, and you can still trade and follow your fibs accordingly. Okay, let me see. Quick refresher, trend change. How do you determine when a trend has changed? Very good question. Very good question. I would say it's subjective and open to opinion. Okay, this is why I like using the bigger time frames, because trend changes are more obvious, in my opinion, on bigger time frames. Okay, I'm going to be very honest. If you draw Fibonacci retracements on the 1 minute and 5 minute time frames, it's going to be tough trading them. I don't want to tell you that they're going to be low probability and they might not even work at all, because I honestly don't know. I haven't tried it that way. But that's not my cup of tea. And it makes it a lower probability because it's such a smaller time frame and there's bigger moves in the works on bigger time frames that you might miss. I would say look on the daily time frame and watch price action. Wait for those reversal candles to come in and wait for confirmation. So something, let's look at oil again, because I think oil showed it best. Futures, CL. daily. All right. So if I was waiting, I would say wait one candle. If you're going to draw Fibonacci retracements on the daily time frame, I would wait for one daily candle to confirm a trend reversal. Okay. So say we're going to draw Fib retrace or the long golden pocket here for oil. Okay. And we're using March 22nd. Well, that wasn't exactly the top of the trend because we want to use swing low to swing high when drawing the long golden pocket because the next daily candle moves higher. So that just blows up that swing high right there because now we have a new high. Instead, it came on March 24th. Now, if you notice March 24th, it's a red candle. Okay, so a possible trend reversal. Let's look at the next daily candle. Okay, we made a very light lower low or a lower low and a lower high. Okay, maybe this is the beginning of the day or of the trend. The next daily candle confirms it. We now have confirmed lower lows and a lower high on the daily time frame. That's when I would say confirmation enough to draw the long golden pocket. Does that make sense, DeBreezy? That's why I like using it on the daily time frame. That 1 hour example that I showed with Apple, I mean, it was valid, but again, look at how it was busted yesterday in the close, right? I mean, technically that short golden pocket was busted. That 3 p.m. hourly candle closed above the golden pocket with volume. I mean, technically that's busted, but I kept it on there anyways. Okay, so I would just say wait for that one candle to confirm trend reversal, or 1 to 2 candles to confirm trend reversal is a good rule of thumb. All right, now that is everything that I wanted to go over for this workshop. I believe I covered all my notes. Does anybody have any questions for me for anything that I went over during this meeting? And I mean, bearish confluence is playing out on SPY. Right now, SPY is below the key fib to close below. We're going to come in and test this demand zone potentially again at 448. If this breaks, 445 is back on deck, and we can go right back down. Let's see, triple Qs. Okay, so here's the difference between the long and short, or excuse me, between SPY and triple Qs. So triple Qs, I drew a little bit different of a trend. I did not choose triple Qs all-time high. Instead, I used this fat reversal candlestick right here on the weekly, okay? I mean, borderline doji, but it's clear reversal candlestick confirmed with the next week, okay? So then I choose the low of this downtrend, okay, which looks like 317.42, okay? So SPY, I used all-time high. I did not use all-time high for triple Qs. Now, if you look at triple Qs never made it past 61.8% fib. Triple Qs has yet to move beyond this first short golden pocket level. SPY, on the other hand, blew right through that and went on to test the 707 fib level. Okay. So this is something else to keep in mind as well. Triple Qs are about to take a big leg down. They closed below 361. There's one demand zone right here to keep an eye on, and that is at 358. Below 358, triple Qs are going to 350. Technically 350.83. I'm going to round down 83 cents to 350. There's a big downside move. Technically, an $11 move to the downside that we're about to get with triple Qs once we get this close below this 50% fib level for triple Qs. All right. I mean, this is a really, really big fib level to watch. You know what? Let's just go ahead and see what a potential swing would look like here for triple Qs. I'm not going to enter it today unless we get that close below. And I honestly wouldn't be surprised if we get one more pop to the upside. So let's look at next week expiration. All right, so next week, 350 puts for triple Qs, $2.13 on the ask. If triple Qs close below 316 or 361.16 today, I'm swinging that position because it is going to be one big leg down. And triple Qs, this is the most volatile of the 4 indexes that we trade. Triple Qs makes the biggest moves, okay? If you notice, IWM and triple Qs are the worst looking indexes today, yet triple Qs are down over $7 for a 2% move in the negative. Okay, this is implying a really, really big move to the downside following the short golden pocket and following fib levels. Okay, and same thing that I showed with SPY, bearish confluence is there using the RSI. Okay, we have lower lows and lower highs in price action. RSI, same thing. Lower high has been or will be confirmed today, excuse me, at the RSI or with the RSI, excuse me. All right, so triple Qs is looking like volatility is back. And I'm super, super excited for it. All right, so does anybody have any questions for me for anything that I went over before I go ahead and wrap up this workshop? Absolutely, absolutely. And this meeting was recorded. So I'm going to go ahead and add or end this recording now.